In this video, we're going to look at how I use the 4-hourly chart to kind of gauge on directional bias. I do this when the dailies and the weeklies are uncertain or I have a mixed expectation. I'll then drop down to a 4-hourly to try and get some perspective. And I'll use the weekly open for this analysis, which I've drawn with this green horizontal line. That is the opening of the weekly candle. What I'm looking for is what has the market done at the start of the week, because often that first move will be the manipulation. Now we can see very clearly that the market has rallied, okay, at the start of the week. And that to me was the manipulation, and the real move was to the downside. Okay, so what I look for is very similar to what I do on the daily timeframes. I look at where has the market come from and where is the market now reaching. So what has the market done? Well, it's come up and it's taken out liquidity. Okay, you can see it's taken out some of these highs on the left. So once it's taken out liquidity or it's rebalanced a level of inefficiency, it then seeks the same in the opposing end. And so it's come back down into these lows. Okay, we've taken out these lows. Now, once we've done that, it's now doing the same thing. It's going back in the opposite direction. So once it's come down, it's now back in the opposite direction, seeking liquidity or balancing a level of inefficiency in the opposing side, which is done in yesterday's trading. And we can see that we've now come into this level of inefficiency, which is now balanced. Okay, I don't see this have any reason to go higher. It's back up at the open of the week. Okay, so we might tap into there. I don't think we will. And so in my view, this current chart is now showing that we now need to go back this way to seek liquidity or find some inefficiency down this way. And I can see that we have some relative equal lows down there. Okay, so my view is that these lows that are relatively equal are now the next target that the market is reaching for. Okay, let's just write that in. So that's relative equal lows. Okay, now this obviously is on a lower time frame, so this is on 4-hourly, and we've got to be careful when we use this analysis because the dailies and the weeklies are going to trump anything in this time frame. Okay, okay, not sure why that didn't work. So that's what I'm kind of looking for at the moment. It's also possible that we just come back down to rebalance this level of inefficiency. Okay, we don't go all the way down there. That's also possible. So we need to monitor the market if we are trading on this chart. Okay, so in the short term, we've taken liquidity above. That's a manipulation move at the start of the week. We've come down, which is a real move. Okay, and that is to take out these lows on the left. We've gone back up because now we're seeking liquidity or inefficiency on the opposing end. We've done that here. We've balanced this level of price. Okay, if I draw some lines there, that might make it easier for you to understand what I'm saying there. So we've come back and we've balanced this price point here. And my expectation now is that the market will seek liquidity or efficiency on the opposite end. Okay, so this could be simply where we come down to, or we go lower and rebalance this level here, or lower and seek that liquidity. Okay, that's kind of where I think we're headed. These are relatively equal lows. Okay, these are pretty close together in terms of the distance in price, and so it's my view that we might be headed lower. Only time will tell. So now your job is to monitor the market and learn from this exercise. Let's also look at the Aussie dollar. Okay, let's take a look at the Aussie dollar. Again, 4-hour chart. We can see the analysis shows that, let me get rid of these lines, make it a bit cleaner. There we go. So what have we done? Well, we've come up from taking out this high. Okay, so we've taken liquidity. Let me actually put on here the weekly open. So that green line there is the weekly open, okay, the open of the week. And so you can see we've gone up, that's the manipulation. Okay, we've come down, and we get rid of that line there. And we've taken out the liquidity on the left-hand side. So we've taken out these lows on this 4-hourly chart. Now, that to me is just too smooth, okay? We haven't really gone down far enough, in my opinion. So on the start of the week, we've had this manipulation, which has taken out this high. We've now had the real move down below the open of the week. And once we've taken out this liquidity on the left, okay, these lows on the left, we're now seeking some level of inefficiency in the opposing side, which we've now come into. Okay, this imbalance is now balanced. And it's my view now that we need to seek efficiency or liquidity in the opposite side. And so we could be coming down, or we should be coming down, in my opinion, to balance that level there, or continue and take out those relative equal lows. Okay, so that's how I use the 4-hourly chart. I put an emphasis on the weekly open, and I look at what has the market done in that first part of the week, because that is often the manipulation. And then the real move comes after. So we have had the initial manipulation, the real moves come after that. In my view, this is a rebalancing, okay, coming back up to rebalance the inefficiency, which is this gap that was left on this move down. And so now that we've done that, I expect that we will now seek liquidity in the opposing end. And this to me is just too smooth and just too clean to not be the reach for the market on this chart. Okay, so your job now is to monitor the market, learn from this lesson by monitoring price action. I will now talk with you in a future video.